We're diving deep into what's happening with SoFi Technologies, a stock that just experienced a decline, but the narrative might not be as simple as red numbers on a chart. There's a lot to unpack, including why SoFi dropped, what forces could be manipulating it, and what signals are flashing under the radar. Let's get straight into it. Hello everyone, welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi ended the trading day down about 2.64%, a dip that seems to echo the larger market's downturn rather than anything specific to the company itself. In fact, when compared to its fintech peers, SoFi held up relatively well. It wasn't a catastrophic drop, and that resilience might speak volumes. Throughout the day, its price moved between a low of $10.49 and a high of $11.15, keeping it within a somewhat controlled range despite external noise. Just yesterday, we talked about SoFi showing some promising signs during the overnight session. Momentum was picking up, seemingly out of nowhere. It even touched around $11.30 to $11.35 during after-hours trading, but once the regular market opened, that overnight optimism started to fade. Big investors were clearly stepping in. Activity on both secondary markets and dark pools pointed toward accumulation, but it wasn't enough to counteract the downward pressure from the broader economic environment. Interestingly, there was no major news or fresh SEC filing that could have explained the movement. No mergers, no lawsuits, no strategic pivots, just a typical day in the market until politics decided to steal the spotlight. Former President Trump made some pretty aggressive remarks aimed at Jerome Powell, criticizing him for not cutting interest rates and essentially blaming him for the state of the markets. While the remarks may seem like political theater, they rattled investor confidence and added volatility, which unfortunately dragged companies like SoFi down along with the tide. And just like clockwork, a negative analyst rating dropped, almost on cue. This is becoming a predictable pattern with SoFi. Every time earnings season approaches, some firm throws out a bearish forecast. This time it was KBW's Tim who holds a 43% success rate, giving SoFi a sell rating and a $9 price target. The timing is highly questionable. Why issue a rating so close to the earnings report when more definitive data is about to be revealed? It almost feels like manipulation, or at the very least, poor judgment. Despite that bearish call, SoFi didn't completely collapse. In fact, it showed signs of strength, especially when you consider this: over 211,000 short positions were closed out today. On a red day, that's a significant signal. When shorts are exiting their positions while the stock is falling, it often means they sense potential upside or see the drop as unjustified. SoFi's current short interest stands at 12.89% of the free float, translating to about 138.91 million shares. That's still high, but a few big players pulling back could tip the scale. Also, the cost to borrow shares has turned positive again, which can act as a barrier for new shorts to pile in. As earnings approach, that may limit further manipulation, at least temporarily. On the options side of things, today saw 833 millioners in calls and 5.44 million in puts. Around 47% of the options activity leaned bearish, which is within a normal range but still worth watching. The put-to-call ratio remains relatively low, which could suggest optimism, or at least traders hedging more cautiously. Interestingly, many of the calls placed today suggest targets in the 12 to 12.50 range, hinting that a segment of the market is anticipating a classic pre-earnings FOMO rally. This isn't unusual for SoFi. It's developed a reputation for these last-minute spikes ahead of earnings, only to be met with mixed reactions after the fact. Meanwhile, bearish bets are positioning for a dip below $10, so you've got two camps forming, and one of them is about to be proven wrong. Digging deeper into institutional activity, both the secondary market and dark pools saw major transactions today. The dark pool, which is often used by hedge funds and large-scale entities, lit up with big volume. Towards the end of the trading day, we saw buys as large as 1.1 million, 1.3 million, 1.9 million, and even a massive 9.1 million share transaction, likely from a major institutional player. Could be BlackRock. Could be Vanguard. Could even be someone new jumping into the SoFi ring. Either way, big money seems interested, and that's worth noting. Now, technically speaking, SoFi closed at 10.69 cents, landing it between two key technical levels, just below the pivot and above the first level of support. Resistance is sitting around 10.86 and $11.16, while support lies closer to 10.56 and 10.37. If you're thinking about entering a position, those levels might be your guideposts. But here's the real talk. Trying to time the bottom on a stock like SoFi, or any stock really, is next to impossible. All it takes is one tweet or offhand comment from a major political figure to disrupt the entire market dynamic. This is why strategies like setting limit orders and dollar-cost averaging can help take emotions out of the game. You won't catch the absolute low every time, but you'll avoid chasing highs or panic selling on dips. And don't forget, more negative analyst reports could still be coming. Historically, SoFi tends to receive a few pessimistic forecasts in the days leading up to its earnings report. Could be intentional, could be a coincidence, but either way, it contributes to the uncertainty. Currently, SoFi is trading below its 200-day moving average, which sits around $11.49, another technical threshold worth watching. If the stock climbs above that level with strong volume, it could spark a bigger rally. Meanwhile, the Alma-Arnault-Lagu moving average is sitting around 1082, and today's close fell short of that too. There's one more thing to keep in mind. While SoFi has bounced back from the $8-9 range, that recovery has also pushed the stock into technically overbought territory. That doesn't mean a crash is coming. Stocks can stay overbought for extended periods, but it does mean volatility is likely to continue, especially with all the Fed chatter and macroeconomic unknowns in the air. To wrap this up, SoFi is in a tug of war. On one side, we have institutional accumulation, short covering, and signs of FOMO before earnings. On the other side, we have negative ratings, political noise, and overall market pressure. The next few days could tip the balance either way. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.